to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's. What is this? This is our daily brief. Actually, interesting to see the looks like the weekend crypto show, which I try to throw a wet blanket on you guys. Geez, looks like we got about 500 views there so far over the past day or so. So yeah, maybe somebody's watching. That's kind of cool. I just happen to have that on the screen. I'm supposed to be over watching the live thing, although I've been completely scatterbrained here this morning. I suppose if you're a Canadian, I think the Americans actually their tax filing deadline was the middle of the month, but us Canadians, tax filing deadline is tomorrow. So a little bit stressed over all that crap. And stupid communist dictatorships. I mean, they're just basically trying to steal all our money, which is such a shame. So I think Canada is actually one of the highest tax countries in the world. It's terrible, this communist dictatorship. But oh well, it is what it is. Happy Monday morning. Ironically enough, it's probably only about 3% of the population here that are actually interested in Canada at all. But anyway, moving on. 29th of April, coming into the end of the month. And, I think probably the biggest thing, and we kind of talked about this yesterday, but we'll probably have more shows and broadcasts and stuff about it coming up. But we have FOMC coming up here in what I guess about 3 or 4 days. I think it's either Wednesday, Thursday, so first, second. Actually, don't quote me on that. It might just usually it's a 2-day meeting, but I might have the dates wrong there. Actually, Glass Insights. I think you were actually posting us what date that is yesterday in the show. So anyway, thank you everybody for your assistance. Looks like market's kind of just sort of drifting higher as we talked about this yesterday. Breadth indicator I think gave a pretty powerful pivot signal there last week. I guess about a week or so ago. It's good to see Seward's got this back up and running. From what I understand, we're going to get raped more. Wonderful. Now by coin market cap, they're going to absolutely kill us on fees for crypto data. Anyway, it is what it is. Seward is, I suppose, going to try and integrate that. We'll have the crypto universe back operating. Right now, I think the crypto universe is missing from our database, which kind of sucks. But anyway, just got to roll with the punches in this screwed up world, and of course, keep our fingers crossed that we can deliver value for you people. Being Monday, really don't want to take any big chances or put on. In fact, actually, I was even watching things like opening range trades got blown out on crude oil. So I guess I was thankful I haven't really been trading that setup very much lately. It hasn't really been working too much. And actually, I noticed when we were, in our day trading room, most of our day traders were kind of like, I don't know, not really feeling like doing too much here today. I don't know, Chris, did you take anything in day trader land here this morning?
Nothing serious, just paper trading. Kind of waiting until the Fed comes and goes.
Yeah, we do have the Fed. That's an excellent point, which means we probably should take it a little bit slow. I think, we had one of these market structure shift reload zone counter trend rally kind of ideas here this morning on NASDAQ. I suppose if you were trailing stops. In fact, actually, one thing I've been noticing on these setups recently that seems to be working pretty well is I'll apply my bot trading rules to the actual setup. And actually, Grim even talks about this and teaches it in the level 1 program when he's trading his setups, that he kind of likes to apply the bot rules to risk management. So in this particular case, if I was going short at that 17,904 area, I'd have my permission to move stop to scratch. And it looks like that's probably going to get blown out at scratch. Didn't quite hit move stop to trailing level. So that's kind of the day that it is. It's kind of, we're just trapped inside a bit of a range. I'm not really trading the stock market that much. I'm really concentrating on crude these days. And I think actually I have permission to start hunting shorts 83.37. Nice cute little double bottom came in there about an hour or so ago following an ABCD target. So I suppose if I was on my game this morning, I probably would have been hunting some sort of long down there. But just very, very scatterbrained here this morning. Not quite sure what it is. Actually, I kind of had a crappy sleep last night. And actually, when I was talking to my day trading buddies in our day trading room at TRI, they were also saying really screwy sleep. So I don't know whether it's a celestial thing or us Anunnaki is maybe they built into our DNA that we all have these terrible sleeps, and then it sort of sets up really choppy, insane price action, sort of screws you around. So I'm not really aggressively hunting for anything today, and being Mondays, it's generally a good idea just to let everything open up and breathe a bit and see if setups do develop through the day. So anyway, that's sort of my mental set right now. Econs usually, and not, very pretty typical for a Monday. Not a lot of news. We had a little bit of a news release. Dallas Fed came out with their manufacturing index and showing just not really a very pretty picture out of the great state of Texas these days. And I guess it kind of makes sense because Texas went a little bit nuts there through that whole sickness scenario. And, you had like crazy cities like Austin and stuff like that going through real estate booms, which made no sense at all. But I get the feeling it's almost like ebb and flow. And we went through a big ebb, and now we're going through a flow. I don't know whether we actually, yeah, I guess we do have some data here. Maybe, ironically enough, let's see if we see any M's and W's. Interesting W coming in here. So I suppose a reading above 10, excuse me, minus 10.4 would actually confirm a W. It would maybe suggest that the great state of Texas is turning back up into expansion. And ironically enough, probably, the high oil price is probably helping that. And I suppose, I don't know what beef prices are doing lately, but I think there's a lot of cattle ranchers in Texas. I suppose Klaus and his bugs and all that crap and Bill Gates and all that nonsense, they'd love to put all those people out of business. But anyway, the only econ that came out today here was kind of a meh report out of the great state of Texas. So, and there is that insane. It was weird. Like when we went through that sickness environment, Texas just went absolutely crazy. But what a beautiful head and shoulders top and fundamental data sets. And I love doing that, applying technical analysis to fundamental data sets. That drives the fundamental guys crazy. Anyway, it's Brian's funny little trader sense of humor. So, point is not really much news here. Interesting. We'll have some fake data coming out of China. What a train wreck that place is. But nonetheless, we'll get data and people will interpret it. I did see, and I don't know whether it's more fluff than reality, but I did see lots of sort of social media stuff commenting on literally now Apple is unwinding their whole Foxconn thing over there in the great state of Winnie the Pooh. And you know, the social media is China's just an absolute train wreck right now. And frankly speaking, that doesn't surprise me. So anyway, you've heard me rant plenty about that. And actually, I am seeing, and I'm quite encouraged by it, although it's not going to really help the public too much. But fantastic to see anecdotal evidence coming out of China, that this stupid real estate bubble is finally bursting, and developers are now actually threatening to declare bankruptcy. And there's one guy here locally in the Vancouver market that says it's an absolute disaster, what's happening here. So thank fucking God. It's about goddamn time this stupid real estate fugazi finally unwinds and we can just sort of get back to normal economics. I don't know how long it's going to take, but it's probably going to take a while. As for the market, like I said, I think we're in sort of sit and wait and see kind of mode. Dead cat bounce. The cool part about it is the if this breadth indicator is operating on point, and the way that I built this 1980s website a million years ago, it's actually very usable information. So I think, if you wake up in the morning and you see the breadth indicator look like this, and you see that all of these histograms, especially on the short and medium term, are buried heavily oversold. I mean, this is a no-brainer. You know that the market's going to lift. And sure enough, that's exactly what's happened here. So I'm kind of pleased that I see that. But at the same time, too, if they bring this thing out of oversold and then we start, we get some sort of, my hunch is the Fed's going to say, I'm sorry, we just can't lower interest rates. Probably the best thing we should do here at this point is just simply ask, what's the market saying? The market is the ultimate arbiter. And the great part about it is, we have tools and we teach these tools in our education program. There are actually plenty of tools out there in the market that will actually help you make those kind of decisions as to what the inflation deflation picture looks like. And it has absolutely nothing to do with whatever these, bankster crooks. I mean, keep in mind, Powell's a lawyer by trade. Lagarde is a lawyer by trade. I don't think these people are actually banksters. They're just hired. Hey, we've got to ram this great reset down these people's throats. Who best to hire to do this? I know. Let's hire a whole bunch of lawyers. So, let's take a look at things like the Fed funds and the 4-year interest rate cycle. Which I do think is we're getting near some sort of pivot, but we'll see what that looks like. And let's actually, yeah, I think I had it saved here, right? So I put that away. And what I really want to do is I want to look at the market breadth. And where the hell is that? God, my old man eyes, I can't even see where the hell the damn breadth is. Too many charts. My head's gonna explode. Oh, great. Everybody's going, it's over there, Brian. It's over there. Why aren't you looking over there? There it is, stock market breadth. Yay. Okay, so TLT tip spread. I think by far the best tool you can use to give you an unbiased opinion as to what the pressures in our society are. Actually, just looking at this, it looks like the pressure is actually abating a bit here, so that's encouraging. I'm not sure what the heck's going on there. Okay, put that away. Jesus. All right, let's see what we got here. So, can the Fed lower interest rates? Well, I don't think so. Higher highs and higher lows defines a bull market. We are coming back up against sort of the panic of last October. And remember, this is where the Fed actually went in and it was like coordinated right across the board. Because the irony of it all is that the Fed and the US banksters and the US, lawyers, liars, whatever the hell you want to call them, They actually didn't say anything when they went through this and they manipulated the market. The only way that I found out about this was that, a non-lawyer, a lifetime bankster, the guy who's in charge of the Canadian central bank right now, he actually spilled the beans right about here when he said, "Oh yeah, well we actually went in and we're manipulating the yield curve through here." What? I thought we lived in a capitalist society, free market. The market did. No, no, no. It turns out that we're the Politburo, a la central banks, actually decides what's going to happen in our society now. And the Politburo in the Rothschilds realm, if you will, decided that they were going to manipulate the yield curve to make sure that a whole bunch of zombie companies across North America didn't declare bankruptcy, and that they did like good debt slaves. They just rolled over their debt so they could just keep paying interest to the bankster crooks. And the slavery continues. So, are they going to do that again? I don't know. I definitely think what we have to see is some sort of market structure here to actually validate that this has been rolled over and we don't have to worry about inflation right now. As long as we see this thing keep printing higher highs and higher lows, unfortunately, that I can't see how the Fed can actually openly talk about lowering interest rates here. That's impossible. But I'd also say too, and I think this, if anything, is probably a little bit of a help for the economy and for society in general, and that is that the energy markets, which I think is all the ultimate leading indicator when it comes to inflation, they're starting to peter out. So when we look, and this is actually very normal. So if you play the market over the years, this is not shocking. Um, yeah, I know. I'm doing a lot of ranting today, so. Thank you for the update, Chris. Appreciate it. So you can see what I did here. Basically take a fib study off of this massive W here. And 2.618. Oh, hello. What a surprise. 85 bucks. So, and of course, everybody, and if anything, you want value out of today's broadcast, you buy your unleaded the middle of February, you sell it the middle of May, you made money 9 out of the past 10 years. So we're now coming into May. I wouldn't be surprised if there's one more push up top here. And probably what ends up happening is, and actually, where's the best place to show this? Over here is we need to see bearish divergence come in on these daily charts to actually mark the top. Is that bear div confirmed? Gee whiz, sure looks like it, eh? Don't think we did definitely get Willie quite stupid there. So if anything, L Tangonators, this is a setup that we teach in our basic education program. Looks like they're firing. You got a confirmed bear div on MACD. You got Willie stupid. The only thing we're missing now is, can I please have a big fat M in price? And if anything, what I wouldn't mind seeing, I think this is like an atom, the way that spiked up to new highs and then came right back down. And if anything, what we'd love to see here is, can we get a nice pretty M to make an Eve? And then I think, put a fork in her, she's done. And that's when you're going to see, after this happens, it hasn't happened yet, and we're just stuck in a trading range, kind of like how Bitcoin's stuck in a trading range. So after that happens, then we can start talking about inflationary pressures abating, and maybe the Fed can start actually lowering interest rates. Having said that, if we think about sort of bigger picture, longer term cycles, that's sort of what this image is. I think we're due for some sort of turn. But as I've said to you repeatedly in the past, the Fed, and also too, remember they're lawyers, right? So if anything, they are super watching their butts, because that's what lawyers do, right? The Fed doesn't want to be perceived as manipulating the market heading into a big political event, the election of the next president of the United States of America. And of course, that will happen there. So, interestingly enough, you might actually find, and you know what this actually reminds me a lot of is you remember, Mr. Trump, of course, he had plenty of, sort of economic advisors and all that kind of stuff. I mean, you don't get to be a billionaire by being stupid in the market. Um, so I get the impression that a lot of his sort of advisors were like, hey, the yield curve is turning here. Why the hell are you getting off your butt and lowering interest rates, you Fed crooks? And that was all sort of, remember Trump had a special meeting and he invited, quote unquote, Jerry to the White House for a special dinner. I don't know whether you remember that or not. But that was basically right in here because probably all of his advisors and stuff were like, well, the sine wave is turning here, so we probably should expect rates to start heading down, and the damn Fed wouldn't move an inch here. So you can see the sine wave is starting to turn here. So at some point down the road, we should get the Fed off their butts. The only issue here, though, is as I've said, I think the Fed would really prefer not to do anything. And also, too, if you actually look at the inflationary data, this is not a picture where you want to get aggressive on cutting interest rates here. If they do, this thing's going to go flying higher here, and oh boy, then we're in big trouble as the market sort of gains new momentum. They often say, you've probably heard Jerry say this before, that it's not so much the inflation that you have to be worried about, it's the inflation expectations. And actually, we have one gentleman. He's actually even local here, lives just around the corner. And he's told me on a few occasions that he remembers back in the 1970s, it was so bad that literally you got paid and you literally had to go and spend your money like right away because you knew that prices were going to go up. And as a result, by you getting your paycheck and spending it all right away, of course, that exacerbated the inflation problem, right? And nobody's saving money, everybody's just spending everything they possibly have. And it just becomes this never ending vortex. So, and also interesting too, you're starting to hear anecdotal evidence, I guess, to a certain degree. We're seeing that out of the Dallas numbers here this morning that we're potentially entering into a stagflation environment where economic expansion is curtailed. You can see how they're doing in the Texas region. Yeah, not so good. And yet the inflationary pressures are still pretty darn strong. And you can see, even coming out of Europe, I mean, they're not staggering numbers, but they're not going down. And I think, the planners would prefer that the inflation go down. But, in this crazy money printing insanity world, another $100 billion in military spending. Is that going to be inflationary? Well, do you have the $100 billion? No, we're going to go and borrow it. Oh, okay, wonderful, great. So that's just adding to the debt load? Yeah. And how are you going to service that debt? Oh, I don't know. It never ends. And I mean, it's the same thing in the country. And in the face of that, either Mr. Biden's incredibly ignorant, which I don't think is the case, or this is some basic great conspiracy. Klaus's great reset. Rothschilds rule the world. All continue make us debt slaves. And actually, I find it really sad because now what they're doing, I mean, it was, and this is more rhetoric. I'm probably wasting time. I guess we'll just leave it at that. I don't want to go into this too much more. All right. So not a lot of econs coming out of today. Looks like stock market, you saw the breadth indicator. So it looks like the stock market's catching a bit of a bid into the Fed. If I was a betting man, my bet, and this is what I post in the lounge overnight, is market rallies into the Fed. And then that's just going to do nothing more and take us right back into a reload short zone, everything that we teach you people. And actually, I might even argue, we could probably even do a little fog and bomb off of this W. And I wouldn't be surprised if we get some sort of stab right up against these old highs. Where are we here? There we are. Oh, look at that. 2.618 sitting right at 88.6. So, we'll see how this goes. The fact that there's such a massive gap here from that options expiry event does lead me to believe that we do need to roll back over. And I think because this W has confirmed, you can actually make it really easy. You just simply say, if this is a bull, then please give me a W on the other side of this downtrend line, and I'll know we're a bull and we're heading up. If this is a bear, now that we have this uptrend line established, give me an M on the other side of this uptrend line, and I'll know that we're a bear and we're heading back down. And for now, I would even argue that we're kind of in no man's land. And I don't know whether it's a good idea for anybody to make any big bets in here. But on a side note, we'll leave it with kind of a fun story. I was sitting on line yesterday, and I watched. I think I even posted in the lounge. Watched this one guy touting this stock, and I was like, this is kind of an interesting story. You can see that basically dead cat bounce off a new low, so it's not really like a huge buy. Came back down, filled in his gap, and then tried to start to turn here. And if we look at like a 4-hour chart, you can see cute little W bottoms coming in. And I mean, are they confirmed? I don't know. I mean, we did pop up through the high here. This probably needs a bit more time to clean up. And considering it's the Fed and all that kind of stuff, and probably this thing just drifts for a little while. But look at this weekly chart. I couldn't believe this. And this is actually exactly like what I do with you all in crypto. It's the same logic, the same poop, different pile, right? So huge gaps higher. In fact, hell, I wouldn't even be surprised if this thing has to come back down to $1.50 here. But we're basically down at the bottom end of the range, and look at these damn highs. That's almost $100. And I won't give you the sales pitch on this thing, but what I'll just simply say is I thought this was funny when I looked at the actual econs of this little company. They if they have any half decent news, they can actually be labeled an artificial intelligence play. So if we do start to get into the summer silly season and these AI stories start going crazy again, look at this funny little stock. 70% of it is owned by insiders, and there's only 6 million shares out because they would need to keep their NASDAQ listing. So they do things like roll the stock back continuously, but they're running out of stock. And they got 1.8 million shares in the float, right? Because so much stock is actually held by insiders. They're not really carrying much debt. They're trading below book value, and they're trading below the cash that they have on the books. So I don't necessarily say that this is a technical buy, but it's damn cheap. And so I threw a couple hundred shares into my retirement account. And I don't know. I mean, I like, me, I like to buy against the bottom ends of ranges, sell against the tops. And the guy, like I said, I posted this in the lounge. So scroll up in the lounge and you can watch the video himself. The guy touting this on social media was like, this is a perfect short squeeze candidate. But at the same time, too, could this thing do absolutely nothing as we sort of work our way through the seasonally weak market period? Sure. So this would be very similar to me just going and nanny nibbling against the bottom end of the range in crypto. Suppose we'll finish off this broadcast with just a quick comment about crypto. Did notice overnight when I woke up, the Bitcoin futures markets were pointing down and making lower lows. I did have a nice little dead cat bounce, and probably what I would say here is, and then we went after the stops, right? So we're in that funny little window right now where the Fed's not really supposed to talk. So as I said on Monday morning, kind of screwing with the market a little bit. And yeah, I mean, the fact that it made a lower low here and we made a higher high here means that this technically is a megaphone, which means, not a big surprise. We should explore a bit higher. We should explore a bit lower. If an M comes in here, get ready for lower lows. If a W comes in here, get ready for some higher lows. So we'll see how that goes. Nothing really to get too excited about there. We might, if we're lucky, this carves out some sort of inverted head and shoulders pattern where that is the head and there's your neckline. I don't know. I mean, that's a bit of a stretch. I suppose we could probably look at momentum and stuff to confirm that. But as for actually doing something on Bitcoin right now, no, there's absolutely nothing for me to do here whatsoever. There are some, and then also too, if we look at the bigger altcoin market, um, actually, this is like, the total market cap. There's nothing really for me to get excited about. We've got M's working here. So if anything, we have to wait for W's to form for us to actually get bullish again. So big hurry up and do nothing. There are some names. It's interesting. This is one that Chico Crypto was bullish of, and it's one of the names that just never did perform. You can see most of the Schult coins, a lot of red on the screen here today. But this is kind of a fun little one, and it's got a red day working as well. This is kind of a fun little one. If I was in the mood to do some nibbling in the crypto market, I think I showed you this yesterday. He's got a lot of room to move back up if they're ready to actually run this thing. And we were sort of going through one at a time. A lot of these names are working their way back down into reload zones. This thing was way, way higher. I don't know why TradingView is stalling out here, but anyway, maybe it's because I'm looking at this KuCoin. I don't know. But for the time being, I'm just not in a hurry to do anything here right now. It'll probably take about a month or so for things to calm down. I always like to go and buy a little bit of something, kind of like what I did with that HOLO. And then if I do get technical reasons to get more bullish, great, I'll add some. So right now I am loaded up on most of these names. I think I showed you I had a really cool matrix that I put together yesterday of a good majority of these Schult coins that I own. And you can see, I mean, I don't see any W's here. The only one that was potentially Wing was that Energy Webs. And then I've got, if I'm going to actually go and buy some to try and establish new positions, these are the ones on the line charts that I don't have. There's the Energy Webs there. But I don't see anything really W here, so I'm not really in a big hurry to do anything. And then when it comes to actually investing serious money, tens of thousands, hundreds of thousands, we do have a short list that our crypto expert, Sjord, Mr. CTO of TRI, is following diligently. Maybe Route might be trying to put in a W here. We'll keep our eyes peeled. I don't see any other W's anywhere here. So, in fact, I don't even see a W on Route. So, I'm not really in a big hurry to do anything here either. And then, of course, you've got all the, hey, this is going to go 100x. And this is social media nonsense. I'm going to keep these on the screen, and I've made the vertical line to show you where these touts came out. And let's follow, just for fun, what these stories look like over the next month or two, because I have a funny feeling there's going to, the sad part about it is when the public is bullish of a space and you hear this kind of talk about 100x and stuff like that, that in itself, sadly, is actually a tell that probably the rally is either very old, long in the tooth, or it's actually non-existent and we're actually in a bear. So we'll see how that plays out. So, all right. Can the Fed lower interest rates in this kind of environment? I don't think so. Should we be thinking that the Fed probably is near some sort of pivot? Yeah. But at the same time, too, I don't think that they really want to get involved in the political picture. Mind you, what you might find is I really, really don't think that they want to have to deal with Mr. Trump again. So you might find that actually they start cutting rates and the stock market starts booming again if they can somehow, feel confident that the inflation story is over for the time being. And ironically enough, I would say that, the tell here is going to be energy. And if the energy market can roll over, then I think we can start making the case for lower inflation numbers. You'll probably see the bonds a lot happier if this thing rolls over, and you might even actually have the Fed say, you know what, the inflation pressures have abated. My hunch is on this Fed meeting right here in the short term, they're just going to simply say, we are data dependent. And, all of you as market professionals, you can just simply look at this and go, all right, I am data dependent too. As soon as I see bearish market structure out of the data, then we know that the problem with inflation is licked. Until we see that, I can't see how the Fed can do anything. All right. Have yourselves a great day. We'll head on over and hang out in the after party for a bit. It looks like that was about a half an hour because we started about 10 minutes late. So hope you got some value out of all that. Slow and steady wins a race. Don't take no wooden nickels. You want a little fun flyer in the stock market. I think this thing's getting pretty damn cheap down here. Is this the bottom? Is there some sort of great momentum turn? I don't think so. But Brian's a cheap ass, and these numbers are starting to look absolutely ridiculous. I love it when I can buy stocks below book value. I can buy stocks they're trading less than the cash on the books. And it's not like these guys are loaded up with debt. There's really not much debt to be concerned about here. So insiders own 70% of the company. This, if this is a short squeeze, like the guy said, go watch that video. That was an interesting tout. I mean, you can see just a 50% retracement here. That's 20x. What is this? An altcoin? So there's a fun idea for you to chew on here today. All right. Have yourselves a great day. All the best. Hugs and kisses, and bye for now.